Good morning. Welcome back. You're watching Bazaar Morning Call. We have our entire research team joining in now to help us prep for the day. Plenty of stocks to talk about, so without wasting any time, lots happening in the telecom space. Rel Jio is in focus. Reema is here to give us the latest on that. Reema, over to you.
Thanks so much for that. So Reliance Jio has announced new post-paid plans. So first for the family plan, which basically means for 3 or 4 people. Reliance Jio has introduced a Jio Plus family plan which starts at $399, and if you want an additional SIM, you can get 3 additional SIMs for 99 rupees each, which means for a family of 4, you would be paying 696 rupees. So a little less than 700 rupees. This is the cheapest available plan in the, what is available right now. So in that sense, some people believe, some of the analysts believe that Jio is now getting aggressive, right? Everyone was hoping for a tariff hike, but here you have Reliance Jio coming out with the cheapest available family plan. But if you compare like to like, which means the same benefits, then Reliance Jio has a higher value plan for almost 1,000 rupees, 996, where not only will you get 4 SIMs, but you will also get access to OTT, which is what the other competitors are offering, like Airtel and Vodafone Idea. So those plans are comparable. So like to like, it is comparable. Reliance Jio has also introduced an individual plan. Now earlier, the cheapest individual plan available for Jio was $199. This compared with $399 that Bharti Airtel had. So nearly 50% of Bharti Airtel. But now for new subscribers, Reliance Jio has gone ahead and increased the tariff, and now the new tariff plan will be $299. So here they are not getting aggressive. They've in fact, in a way, initiated a tariff hike increase. So all in all, the question is, with these permutation combination, can they succeed in post-paid? In prepaid data segment, they've made a big dent. They've captured a very large market share. But in postpaid, despite offering plans cheaper than peers over the last few years, Reliance Jio has not managed to garner a subscriber share because those subscribers are less price sensitive. So will this make an impact? That's something which remains to be seen now.
Okay, that's a very interesting one, and definitely something to watch for, of course, Reliance Jio. And of course, we'll watch for Bharti Airtel as well and see what the reaction is like. Thank you, Reema, for that. Sonia, you're watching for Maruti Suzuki. There was some interesting action on the stock front yesterday with the promoters hiking stake.
The parent company, Suzuki, yes, they've hiked stake in a very small fashion. So what they've done is they've bought about 3.5 lakh shares in Maruti for worth about 300 crores from the open market. And with this, their stake, in any case, they have a majority stake of over 56%. Now it goes from 56.37 to 56.48%. Now, Suzuki had last bought stake in Maruti way back in June of 2020. And as we know, stake increase from promoters generally bolsters the confidence in the stock. And hence, I'm expecting the stock to be in the green. Now, what could be the reasons? Why is the Suzuki increasing stake? There are a couple of reasons. Now, the first electric vehicle from Maruti stable will be launched in FY25, and Maruti has big plans in the EV space. They plan to introduce 6 electric vehicles by FY31, so that's the big positive trigger to watch. Also, Suzuki has already announced capex of over 10,400 crores for the electric vehicle business and battery manufacturing in Gujarat. So they are expecting demand to pick up in the EV space in a big way. Of course, we all know that Maruti is a bit late in the game, but now the entire EV space is, thriving. So hence, Maruti will be able to benefit from all of that. Some of their new launches have also done very well. So the new Grand Vitara has seen a very good response. The Jimny, the Fronx, all of that will bolster Maruti's presence in the UV space and help them regain market share over there. Citi put out a note where they said that Maruti is now their top pick in the auto sector. There are 2 reasons for that. One is that the market share perhaps has bottomed out and it's only northwards from here. And second is the new UV models will definitely help them bolster their market share. So I'm going with green on that stock.
It's a topic for Citi. Maruti here in India is also the topic for Suzuki. Globally, right? In all the markets that they operate in. I mean, I think very clearly this is the focus market for them. Well, LTIMindtree held an investor day. Reema is here with the key takeaways and what was said. Reema, hi, morning.
Hi, so LTIMindtree held its first analyst meet after its merger with Mindtree. It was held by the CEO, Debashish Chatterjee, who outlined the strategy, and he also indicated that the merger between LTI and Mindtree is now completely over. He reiterated that in the next 4 to 5 years, the merged entity, will realize revenue synergies of $1 billion and cost synergies, which will help improve margins by 200 basis points. This is not new. They had indicated it earlier, but this has been reiterated. On macros, he did indicate the clients are a bit cautious. Deal conversion is taking time, but the large deal pipeline remains quite robust. It amounts to $3.2 billion for LTIMindtree. 55% of their revenues is unaffected by the macro uncertainty. They also disclosed that SVB was a client, but the revenue contribution was very, very minimal. Back to you.
Okay, so not too much of concern there from that call, it seems. Thanks for that, Reema. Let's go across to Surabhi. Surabhi, you're watching for a couple of stocks. Which ones?
Hi, thanks for that. So today I'll be watching at two con calls, PVR and Voltas. PVR Inox had held their first con call as their merged entity yesterday, and there the management has said that they will be adding 200 screens every year for the next 2 years, and they aim that the 40% of these new screen additions will come in the southern part of India. The management expects the EBITDA synergies to be in the range of 200 to 225 crores, and they expected to realize that in the next 12 to 24 months. In the longer term, they expect to drive synergies from additional F&B revenues, ad revenues, and also rationalizing their operational cost. They've also gone ahead and said that they will derive 5% of their spends per head from their food delivery business. Now, most brokerages have a positive view on the stock. CLSA and Nuvama both have a buy rating. The takeaways from the Voltas management meet was also quite positive. They have said that due to the early onset of summer, the room AC sales to channel partners in the month of Feb have been pretty strong. The secondary market share in the month of Jan has been maintained at 19%, and they expect to see further improvement in that. They may take price hikes in month of April depending on the secondary market demand. And on the EBIT margin front, they have said that they expect it to remain at single digits, and they should touch 9% in the near term. On Waldbeck, they plan to launch more SKUs in the near term, and they expect the expansion of the distribution channel to increase by 1.5 times by FY24. Nomura has a buy rating on the stock with a target price of 1,083.
All right.
Go on, Sonia.
No, I just wanted to mention that, Surabhi, thanks for that. I just wanted to mention on Titagarh Wagons, you know, they've emerged as the lowest bidder for this railway ministry order. This is on the back of that Vande Bharat order that they had announced a while back as well. So this is an additional order that they've won. So it's another stock to look at. I mean, on the Vande Bharat order, they had said that the first train will be delivered in 24 months, and they also spoke about how there's a upfront revenue potential of 7,500 odd crores when they supply the first train. Now there is this new order, 15.5 lakh forged wheels. So I guess that will be another stock to watch today.
Absolutely. I mean, you know, when railway infrastructure, one of the things has been, people always ask, well, which are the stocks, what are the bets to take on that theme? And there have always been these stocks listed for the last 2 decades more, but you know, because orders are patchy once a year, once in 2 years, they've been, I mean, stocks have also been very, very patchy. Pick up around the railway budget, which of course doesn't exist now. But I think with Vande Bharat now, there is a steady inflow of orders which we are starting to see. And that program of Vande Bharat, I think, will only be expanded in the coming months and years. All right, let's move on. Vivek is standing by with more stocks with news flow. Vivek, hi, morning.
Well, good morning. You know, quite a few stocks on my radar today. You know, a lot of news flow post-market hours yesterday. First on the list is Raintel. The company has got a work order of over 287 crore. Now, this is for development of IT infrastructure in both New Delhi as well as Bangalore. We also have to keep an eye out for PNC Infra. The company has emerged as the lowest bidder for an NHAI project. Now, this is in the state of Bihar, and the company will be developing the project under the hybrid annuity mode, and the project cost is worth around 1,260 crore. Keep an eye out for GMR Airports Infra as well. Now, the company is looking to raise funds. Now, the fundraise could be either via the QIP route or the foreign currency convertible debenture route as well. So this particular stock too will remain in focus. Lastly, keep an eye out on Dixon Tech. Now, newspaper reports that we have not independently identified have reported that the government has cleared an other tranche of PLI scheme. Now, the incentive is worth almost 765 crore. Dixon Tech is eligible for over 150 crores here.
All right, thanks a lot for that. So lots of stocks in focus. Here's a quick recap in case you missed out on any of them. Stocks with positive news flow. All right, before that, We also have to talk about the way crude has been moving. It slipped to $78 a barrel, and now it's seen a minor bit of recovery. So Manisha Gupta is joining in to give us a quick update on that. Manisha, good morning.
Thank you for that, Sonia. Well, yes, we have seen the crude oil prices extend decline by 5% in the overnight markets. A percentage point higher is how it's trading right now, but that is because the banks have the bank shares, that is, have staged a bit of a recovery. The global equity markets are off their lows, and that clearly seems to be supportive many of these commodities as well. But having said that, trading below $80 a barrel, this is the lowest since December 2021 that we have seen in sense of crude oil prices. For this week itself, we are down by 6%, and for the month down by 8.5%. The markets are still looking at contagion fears and global recession concerns. That is expected to weigh onto the prices. While OPEC says that they are expecting high oil demand from China in this year, the markets will also watch out for the Chinese industrial production numbers that comes in today. And of course, it is the US PPI, retail sales, all of that also coming in today. So the markets are expected to be continuing to be choppy.
Okay, thanks a lot for that. That's on the commodity space. But in the equity space, the SGX Nifty is indicating that the start will be well in the green. In fact, high point of trade right now on the SGX. But as promised, here's a quick recap of all the stocks that you should be watching out for today. On the positive side, there's Maruti, Reliance, LTIMindtree, PVR, Voltas, RailTel, PNC Infra, GMR Airports Infra and Dixon Tech. While the only stock on our radar with negative news flow this morning is ONGC. So watch out for that. But take a quick break. On the other side, Devin Choksi of KR Choksi will be joining in for some fundamental stock analysis. We'll also connect with Ajit Venkatraman of Phenolics Industries to discuss their business outlook. Stay tuned.